Hi, Go Mets by Liliana Nealon. You know, any shrink will tell you that overdependency on anything or anyone is not a good thing, that it generally leads to addiction, and most addictions count on some enabler or another that just hangs around to help the addict deepen her addiction. Hmm. What does this have to do with the global markets? Well, it doesn't surprise me to read that China's runny nose is causing severe colds in Brazil, Argentina, and most of the rest of the world. You know, it's, as I've said before, it's hard to find a product in any country that doesn't say made in China, but that's really only half the story. China has been a huge addict to anything that any country could ship, from basic commodities to steel to airplanes to anything that the Chinese can chomp on. Total trade with the United States, I think last year, is well over 500 billion. And so when China hiccups, the world gets indigestion. Simple. You know, numbers show that Chinese growth has slowed to 6.9% from 7%. Although the number was higher than market projections, there's reason to worry. The world has a deep codependency relationship with China, and adjustments will have to be made. For example, I read that BHP Billiton, one of the codependents, shipped enough iron ore each day last year to China to fill the Empire State Building. Each day. Nice. Vale, a Brazilian mining company, is unloading assets like it's going out of style because China appears to be in withdrawal. The New York Times reported that Vale and Sumitomo, who's its Japanese partner, sold a coal mine in Australia in July for $1 when it was priced at like $600 million 3 years ago. And so it goes. In an editorial on Tuesday, the newspaper O Estado de Sao Paulo in Brazil described Brazil's relationship with China as semi-colonial, quote unquote, claiming that the country's economy, quote, depends in excess on Chinese prosperity, unquote. But that's a nice lesson for all of us. Emerging markets, beginning with Brazil, have had a heavy dependence on China. And the hard part is the global markets are now just beginning to realize that they cannot really trust the official numbers coming out of China. Thankfully, I was raised in Argentina and cut my teeth on not trusting any numbers coming out from the government. And I have to award the quote of the week to Julian Evans Pritchard, an economist at Capital Economics, who said, quote, "We don't really trust the overall growth figures," unquote. So I still say no rate increase, in particular in view of what's happening in China, but now everybody else is jumping on the bandwagon. But allow me for one moment to gloat about the fact that the ABroadWithAView called for no interest rate increase this year a few weeks back, even after Yellen was hemming and hawing. Going back to the markets, they ended the week mixed with some bank stocks rallying despite negative earnings pictures. So, okay, I admit being an old foxy trader, I actually thought that bank earnings would be higher than expected because there was so much volatility, and that's one of those things that traders love. And except for Citigroup, which reported very strong earnings, mostly because of job cuts, most banks did not fare well. The Nasdaq Composite performed best, mainly because biotech stocks rallied after the Democrats, during the debate, decided not to talk about it. The Nasdaq actually is the only major benchmark showing a gain year to date. And talking about the debate, I have to say that it was refreshing to see candidates actually talk about issues. But last Wednesday, despite the fairly positive economic news, was a pretty dour day in the stock market, led by none other than Walmart, which was down close to 10% on lower earnings, which they like to blame on the fact that they raised the minimum wage to $10. Couldn't happen to a nicer bunch of people, I say. Boeing also dropped over 5% of its value on rumors that Delta was going to be buying used airplanes instead of new ones. You know, Boeing is one of those stocks that I've liked over the years, especially as part of a more conservative approach to your portfolio. You know, you could just buy BA, earn the dividend, and enhance your yield by writing covered calls against it because it's a very stable, likes to trade in a pattern kind of stock. If you have any questions about how to do that, just give me a call or write me a note. And you know the reason for my orange and the blue and orange is like I'm not a very big sports fan except for baseball. I'm not crazy fan of any team except for the Mets. As newly arrived immigrants, my parents and I lived in Queens, and I soon became a Met fan. So who has time to worry about the Marcus when the Mets are playing in the playoffs and they're strong and they seem unbeatable? Go Mets! This week, we will again see a slew of earnings reports. Amazon is expected to report an over 20% increase in revenues and a loss of only 13 cents a share versus 95 cents a share the last time around. Will Amazon ever make money? Who cares? Yahoo is also expected to show strong revenue gain, and I think we're seeing earnings reports from American Airlines. They should be doing well with oil prices hitting rock bottom every day. And Microsoft and IBM are also reporting this week. Look for strong housing numbers tomorrow and jobless claims and leading indicators on Thursday. And you know what? I can't close without saying something about Volkswagen. It seems that 75% of Germans still trust the company and believe in the company. Yep. And you know, if my memory serves me right, around 40% of Americans still believe that Saddam Hussein was responsible for 9/11. This is Lily Leland, Abroad with a View. Thanks for tuning in.